So good morning, everyone. Let's go through the market review for the 31st December 2023, last day of the year. We had a great year, and let's see what lies ahead for us in 2024. Now, world markets have kind of been flattish itself, not much of movement after breakouts globally. Uh, Everything seems in momentum, but no strong moves as such. Dow Jones is trending on all time frames. For last couple of days, it's been in a range, but that is a very normal behavior for any market which is trending after it breaks out. So it consolidates and moves. There's no sudden move in that. Likewise, Nasdaq, if you see, it is trying to retest the breakout point. This was a breakout point after it went into all-time high. It has just retested that. Very important that it reverses from here. S&P still a little shy of all-time high, so should move again. Nikkei, if you see the RSI front, short-term and the daily and weekly are still sideways, though the longer term is strong. And it's hovering around the all-time high, trying to break out. If you see the number of months, 1, 2, 3, 4, 5, 6, 7th month, it has not been able to break out of that. Whenever it does, please understand that's a 30-year breakout. Whenever that breaks out, it's going to be really, really strong. And Japanese are one of the largest investors globally. So you will see a lot of positive impact of that as well. Now, the Germany trending clearly after the breakout, a little sideways like Dow was, but since it's strong on all time frames, trend likely to continue. US oil, I have been saying sell on rise. It did move up a few days, and now at 3 days of fall, it has taken away 50% of the pullback. So as long as the RSIs are lower, US oil is likely to come down further. And I am expecting it to come down to around 63-ish levels, and then we'll review it. USD INR should test 81. It is still range bound. It is not moving up on either side, but chances it may come down to 81 before it bounces back. Gold is trending on all time frames. Again, back to its recent high. If it moves out of gold of that recent high, the momentum can continue in that. There are various news again coming from China, whether China will accumulate gold more considering the economic turmoil or they will liquidate. It's a story that none of us can anticipate. Technically looks good, so let's go with that theory. Silver, on the other hand, is unable to break out. Every time it is moving up, there's a big sudden fall in that. So completely avoidable until there is a lot of confirmation in silver. Otherwise, it's just consolidating. Now, Indian markets have been good this week, and there is no concern. Nifty, equal weight, bank index, everything has moved. Auto has come back after a retracement. FMCG has done well. Metals have done well. Pharma, obviously defensive is picking up. PSU reality. Talk about any sector, we have done well versus the previous week. So no much of concern. But having said that, the broader market has kind of been like a 50-50. Not every stock has moved. So Nifty in the short term, though RSI front it is trending, the daily candle points to a little pause from here. May retrace a little before there's a further move up. So let's see, because Reliance is also near the resistance. Reliance is yet to break out. HDFC has just picked up the steam. So let's see how it goes with Nifty in the coming few days. There's more information that we'll share on Nifty and the market as such. Even Sonal has some information to share on this. Now, if you see December 22 high, from there till October this year, market had just moved up 7%. And before that, there was also quite a big dip over here. From the lows of 23 to this rally was about 18%. Again, there was a dip. In October, 10 months later, Nifty was where it was in December 22. And from there, there has been a run of almost 15%. If I see from December 22 high to December 23 high, the market has moved about 18 odd percent and not even 18%. Yeah, approximately 18% is what it has moved in all. But if you see versus that, you realize that stocks have moved many-fold. There are stocks which have not moved as well. So if you see, the first 10 months were very difficult time for people to trade, considering the kind of fall it had, the kind of movement it had later, and another fall. So going by purely Nifty, it has not that been, the first 10 months have not been that great. But the game changed in the last 2 months. In 2 months, it has moved almost 3,000 points. And that is not a joke. This is something I had shared in July earlier this year. The first 15 years of Nifty, after it started, 91, it moved in this channel. And after that, it broke out. There was a complete range shift. It consolidated. And the next 15, 17 years, it was in this channel. It continues in this channel. Whenever it breaks out of this channel and moves out, there's a further range shift. The next 15 years are going to be phenomenal. So 15 years from today, let's talk about 2038 or 2040. We are talking about Nifty close to being at 1,80,000. Now this trend is likely to continue. There is no looking back. But for Nifty to move out of this range and sustain over here, that is a range of 22 to 25,000, is not going to happen overnight. There has to be a lot of momentum that has to build up. There has to be a lot of consolidation that has to build up, and then it is going to happen. Now, whether that will happen in 2024, 25, 26 is very difficult to say. All I'm trying to say is definitely the long term looks really good. We as traders, we have to manage the short term pains, and that is what we have been pointing out for the last few days. So the broader picture is really strong for Nifty. Equal weight index can pause a little considering the candle it is forming, but momentum wise, nothing wrong. There is negative divergence, but as I said in the last week, this divergence can get extended, and only a big reversal candle is needed, like what we had seen, and a follow up after that will give us a signal to exit. Until then, all is good. Nifty P is now 23.3. We had entered around 19.5. So we have seen substantial rally with the Nifty. The valuation fronts, now the EPS figures will change with the Q3 results coming out in Jan. So as large cap figures and other company figures come out, they justify those, the valuation, the P valuations that they are holding, the earnings that they add to Nifty. If that is going to go up and the P is justifiable, market will continue with the trend. Otherwise, stock wise, market also can correct. So that is now everything is linked to the earnings. So this earnings season is very, very important starting from Jan onwards. Bank Nifty is trending on all time frames. I don't really see a concern because private banks have started picking up pace again now. Bank Nifty is closer to resistance, breaks out and closes above that will help it move up. So very important that happens. Otherwise, it'll keep consolidating. There may be a dip as well. For now, I don't see a big dip. It can be bought into, but subsequently may happen. We may see a correction subsequently. Bank Nifty, like Nifty, has had a very choppy first 10 months. It has fallen, didn't have a very good move up. It was mostly the PSU banks which are moving. The private banks did not have a great move this year. And there was a good dip, even though Nifty hadn't fallen so much. Nifty didn't break the December 22 high, but Bank Nifty did. And now it has recovered and moved up about 15 odd percent. But compared to December last year to December this year, Bank Nifty as an index has not outperformed. It is only selected banks that have performed. Now, mid cap, there's a negative divergence, but no sell-off signs. So the momentum continues over here. And we'll speak more about it going forward in the session. Likewise, it is small cap again needs a sign of reversal to act. Otherwise, it's just continuing with the trend. All I can say is we have to be wise and keep booking profits. Identify new trades, don't get stuck. You cannot marry a stock because it has no emotional connect towards you. Only you have a connect towards it. So be wise and, book your profits. Auto sector, again, now this is something very interesting. If you see, when there was a correction, the weekly and monthly RSIs were strong. Daily reverse from 50. Whenever there's a retracement and the stock reverses from 60, 50, 40, those are reversal signs where you can start buying and then you can ride the rally. Now we have Excite with us. We did a quick trade in Tata Motors. Maruti is trying to break out. Let's watch that. Even a few other stocks, basically, or two-wheelers have outperformed. FMCG is strong on all time frames, though it was consolidating last week. IT sector is sideways. Now, if you see what happened with IT's last 2 weeks, after that day's fall, IT sector broke out. A lot of stocks gave breakout, it went into all-time high, but they're now consolidating. One of the reasons is very clear because when the breakout happened, there was so much of noise in the retail investor space. Okay, and whenever the retail investors jump in all together, there is definitely a consolidation before a strong move comes in. They'll shake it out and have the retail investors get out of it before the move starts. And that's a typical behavior of most of the sectors. IT is following that. Until these levels hold, until the RSIs hold, I don't see a concern, but it is patience that is needed. Metals, again, if you see RSI tested 60 and reversing, and how a lot of metal stocks have moved out. Aluminum has really outperformed. We exited Hindalco very early, considering that day the way market had fallen and all the noise around. Specialty steel, a few stocks we have identified. We'll share them with you in the coming few days, and we'll be taking up a little quantity of that. It's a longer term story, so we are not in a hurry. We'll accumulate. Pharma is very stock specific move, even though index is kind of doing well. Not everything is moving. So, and again, as I said, pharma is not one of my favorite sectors because it's very sensitive. So even if we have, it'll be very stock specific. Otherwise, let's just avoid. PSU, it's a never ending story. I don't know what's happening with it. Valuation funds, it is a lot of stocks are irrational, but they continue to trend. So we go ahead with the trends selectively. Whenever we get a good opportunity, we will re-enter in that. From the PSU front, I will show you how to play a stock like RECL and PFC. So we'll take it up in the stock section. PSU banks, a very mixed move that is happening. Bank of Baroda is trying to get into all-time high. Canara Bank is hovering around. SBI trying to build up steam. So it's very mixed and very confusing. But at the most, it may consolidate and move up. There's a possibility that it may just break down. Canara Bank was attempting to break down. It hasn't. But if it does, then we may consider going short also. So let's watch out this space. We have been holding in equity for a while. I've given big targets. That story continues in the longer term. Private banks with HDFC moving out has helped a lot. So, but the momentum needs to continue. Let's see whether HDFC Bank is not clear. It has a lot of resistance until it moves above the all-time high of 1700 change. So ICICI Bank is now range bound. Axis Bank is range bound. In fact, Axis Bank was correcting. So let's see. Private banks should support Bank Nifty or it gets weak. We'll get to know with time. Reality, now this is one sector. Again, if you see the reversal from 60 and DLF moved up almost about 70 odd points. So when long terms are in momentum, every dip is bought into. I had been saying reality is like dips to buy. It has worked out. So yeah, we have one or two stocks and we'll continue to play with that. So I'll just take a pause over here before I go into the stock section. I want Sonal to explain a couple of things that she wants to share with us.
Good morning, everyone. So today I'll quickly take you through the seasonality of Nifty in the month of January. And I have actually collected few important data pertaining to that. Today, I'm just going to discuss quickly about all of the, what is the nature of Nifty in the month of January. Now, this is the last 16 years data that I have accumulating, and I'm just here showing you on monthly time frame. You can go back to weekly and daily to kind of substantiate the percentage and all the, the other numbers that I'm going to mention here. So let's start with 2008 January. Nifty peaked around 10th of Jan and was down 30% from there by 22nd of Jan, recovering minorly after that. And this is on the back of subprime crisis and other recession problem and all, and the housing bubble and all that happened in the year 2008. 2009 January, Nifty peaked around 7th of January, down 15% by 23rd of January. So this was Nifty in 2009. 2010 January, Nifty peaked around 18th January, down 10% after that. By the end of the month, it was 10% down in 2010. 2011, Nifty peaked on the 4th of January, down 13% during the month, recovering only post-March. So here we saw the recovery in Nifty. Otherwise, those 2 months were very, very painful. Nifty January 2011, Nifty peaked on the 4th of January after seeing a stellar rally in December. And it was down 13% during this month, recovering only post-March. So 2 months we saw this retracement and correction. Then 12, this is Nifty, January 12 and January 13. Nifty was quite positive in January. These two Januaries were really good for the index. Now, 2014, Nifty peaked around 23rd of January, down 5% by month end. 2015 January, Nifty was down 5% just only in 2 trading days and in the first week, but later kind of recovered. This is 2016. Nifty peaked on the 1st of January before going down 10% by 20th January, and we saw further fall of 10% in the month of Feb. Nifty 2018, I very well remember this year because this is the year I entered the market, started trading. Exuberance of 2070 came to an end around 25th of January, and it was downhill from there. 2019, a very, very choppy, this is 18, this is 19. January 19th, very choppy January. It was mostly sideways. Sometimes it was showing a uptrend, sometimes downtrend. So no one could actually, gauge the proper direction of Nifty in the month of January. January 2020, before the severe March crisis, market had started correcting from 20th of January until the 1st Feb, and it was overall down 7%. 2021, after a super one direction run since January 2020, Nifty corrected 8% from 21st of January till 31st of January before resuming the uptrend from 1st of Feb. That was the budget day. Now, Nifty 2022, Nifty peaked on 18th January, a level which was only seen again on 11th of November. And post 18th January, next 1 week, Nifty saw 6% retracement and minor recovery was only seen in the month of March. This is Nifty 2023. It kind of, followed December. It saw good retracement followed by January, December. March is only, at this point, it was showing reversal. And from April onwards, when we started TradingOwl and started sharing our trades with you all, we were bullish, after that, hardly, probably barring 6-7 scripts, we have never gone short aggressively in any of the script. And this is where we got the uptrend. Now, if you see the divergence on daily time frame, there is clear negative bearish divergence. The price has made a newer high, but RSI hasn't. So divergence has set in. And if you see this candlestick pattern, what it has made on daily time frame, it is a bearish harami. So again, it is throwing a word of caution on us, and we have to stay cautious here. So this was Nifty, and Nifty January month has always been very, very choppy. So again, I'm saying stay cautious, stay light in your leverage position. even if there is a strong breakout, you can just, kind of go long in equity. No need to go aggressively long in future. Now, Bank Nifty, again, I'll just show the seasonality of Bank Nifty. So here, Bank Nifty 2008, 22% correction we saw in the month of January itself in 2008. 2009, 5% correction. 2010, 5% again. 2011, 10% correction. This was a neutral year followed by a positive year. 2000, this is what? Yeah, January 2014, again a good retracement. So Nifty Bank overall, until if you just kind of see the seasonality, it has never been a positive month for, seldomly, but mostly it has been a negative month for Nifty Bank. And 22, it was 8% down. So if I take the average of last 16 years for Nifty Bank, the monthly drawdown of this month is 2.47%, which is highest compared to any other for Nifty Bank. That again kind of tells us to stay cautious and stay, light in Nifty Bank. From banking sector, seeing this data and seeing the possibilities what we kind of face in January, we are staying very, very, though we are seeing in few banks strong breakout, we don't want to venture out a lot in future. Barring ICICI Bank, we don't have any bank in our holdings. Now, Bank Nifty, if you see the divergence, again, there is bearish divergence, and on weekly also, on higher time frame, both in the case of Nifty and Bank Nifty, now the divergence is setting in. We don't know when the correction would be or when the retracement, we'll see, and how much deep it would be. Of course, we will go level wise. Right now, 21,500 in case of Nifty is a good level. Once it is broken, we may kind of, increase our shorts, and the next level will be 21,000. So 21K, the day it is broken, that is the base that Nifty has made. The day it is broken, we may see some kind of pause in this uptrend. So my only kind of message for January 2024 particularly would be to stay cautious, stay light. Even if we are kind of missing some uptrend, it is not difficult to kind of, tap in later on when it comes to our buying level. We will be looking at our levels very, very cautiously. And whenever it is a good risk reward for us, we'll go long aggressively. Until then, just stay cautious, looking at this seasonality. And market has always been about the possibilities and the past trend. So let's see in January if the trend of choppiness is followed. So this is it from my side pertaining the seasonality. Mayur would discuss now the stocks and other things what we have decided.
So I'll continue from where I left over here. Now, market comment. I have both Sonal and I have explained what the market sector-wise looks like and what January has been like. Now, I would want to go beyond. There are 7 long weekends this year. Please make a note of it. Plan your activities. Do your bookings around it. So as we get hit with minor losses and it hurts us, doing expensive bookings later also will be equally hurtful. So plan it around. This year is the year of leap year, and I'll just show you a quick presentation of how leap year has been in the past. And this year is also the year of Saturn, and Saturn only rewards people who work hard and develop skills. So you know exactly what you need to do this year. Okay. Now, all of us know what the law of diminishing marginal utility is, right? The more we consume a particular thing, as we consume more, the utility of that or the satisfaction of that diminishes. But that is not true for money. The more that we earn, the more money we make, it is the satisfaction we derive is just higher. That it never gets lower. So that greed of ours continues non-stop. And our expectations from the source there where we're deriving the money, our expectations just keeps going up. And we tend to ignore a lot of negatives around that. So it is very important that we also understand where to draw a line over there. We have to continue the process, but the process also has to be rational. And there's a theory called instant law of instant gratification. You know what is that? It is a theory which says that if you desire something, it gives you maximum satisfaction just right then, knowing the fact that the longer term goals or the impact of that may get affected. Today, we all traders fall under this theory of instant gratification. We know that money is made in the long term by holding stocks, but what gives us happiness is booking profits in the short term on a daily or weekly basis, money coming into our account and we enjoying it. So we basically fall under this particular theory. Today, we all have a habit of a healthy lifestyle, but we do cheat often. We go for binging on pani puris and pizzas and everything, partying and all that, right? Why do we do that? Because it gives us satisfaction knowing that it is not good for you. But do we stay away from it? We do not. What do? We go ahead with it. What do you do when you constantly eat junk for X number of days? What do you do that you go on a holiday, eat heavy food, put on a few kgs and come back? You go on a detox. Detox is a process of realigning your body to again start a process where you trying to get back on a track so you can achieve your longer term goals, isn't it? Now, where we have made money on a daily basis or a weekly basis for the last 8 to 9 months, it is a time where we need to go into that detox mode now. We need to look beyond, okay? Where the market stands today is a reality, and reality is what we have been talking about, the Nifty and the valuations. We have to stop this process of looking at short-term trades in futures and those small, greeds by over trading and all that from here on. It is very important. Please understand, when we were in school or we were coming up, growing up, we were taught not to cheat people. Our mind has been framed not to cheat people. Our mind has been framed not to get fooled. Our mind has been trained to look at reality. But in the process, we were also told not to get fooled, but we were not given the criteria on how to identify not getting fooled. That only has come with experience, right? Today, the market is giving you those hints that we are giving you a very nice rosy picture. We are going to tell you that, okay, from here, all is good. The India growth story is tremendous. So you have to be a part of it and no, don't exit. We need to understand that which part of this is basically where we are being cheated, where we are being fooled, and we need to stop right over there. And how do we do that? Either be bold and decide for next few weeks I'm not going to trade, or next few weeks I'm only going to take small trades in equity and not pump in my money. I'm not going to do future trading. And if you still want to do your future trading, if you are a person doing bulk trades, stick to one lot. However it is, control your ability to control yourself at this point in time and avoid that instant binge cravings is what is going to decide your ability to remain in the market in the long term. And if you do not take that decision today, if you are not bold enough to do that today, then I'm going to tell you very clearly that the kind of whipsaws that you're going to see in 2024 is going to wash you off the market. I'll give you an example of 2004. I used to trade from Bombay. There was a guy sitting and trading with me. He had a very small business. One day he comes and we were day traders or short-term traders. We were making little money. And honestly, we are not positive also. We are just struggling. This guy comes home, comes one day. He like, आज 2000 रुपए का profit बना के जाना है. I have to take my wife out for dinner. He took a position. Forget about dinner. Surprise, market surprise. That was 2004. That was a leap year. All was going good. That day market fell. He booked a loss of 1 lakh. That guy left the market. He would see us on the streets and not even say hi. That was the kind of pressure that was built on him. So leap years are damaging. Why am I saying all this? Is just a warning that you guys don't go overboard. Consistently, small profit building is the key. So stick to equities, stick to smaller trades, and be content with that from here. Best is to go for a detox. If you can avoid trades, watch for a few days, build up your skills with the observation of the market. This year is for skill building. So work on that. Master your setups, whatever is you are comfortable with. And I'm telling you all this out of my experience. Just read this. Good decisions come from experience, and experience come from bad decisions. It is your choice whether you want to make those bad decisions and learn from it, or you want to learn from what we have already learned by making those bad mistakes. The choice is purely yours at this point in time. So take a call right over there. So I'll just quickly show you an old presentation of mine about time analysis and how leap years have been. So just be very careful. Time analysis covers a lot of factors, that is Gann dates, anniversary dates, leap years, moon phases, power 4. You all know that we keep messaging this on and off. So I'll come to the leap year straight away right now. I'll also share this video with you all after this session today. Now, just the data that I could compile is what I'm showing you here. But if any one of you want to Google it and go back into the US data, which is there for the last 100, 150 years, you'll figure out how the US markets have performed during leap years. So leap years typically the years where Feb has 29 days. 1984, there was a global crash. 1988, there was another crash. I could not really figure out the reason. 1992 was Harshad Mehta scam. 1996 was Asian financial crisis. 2000 IT crash. 2004 was a volatile year, election year, extremely volatile and choppy. 2008 was a global meltdown. 2012 was an extreme volatile year. 2016 was a demonetization. 2020 was a pandemic year, and 2024 is what we start tomorrow. In all these years, the year prior to these years, everything was good. There was a market rallying. Every person, every institution, every bull was super bullish. He had only good things to talk about. 2007, when everything was good, people, all institutions, all brokers, all big bulls were giving us higher targets of the market and stocks. They were justifying every move that was going to come your way ahead. What was that they could not identify? And just a month later, things changed. When no one in the world was able to identify what is coming their way, irrespective of how big they were and how long they were in the market, we are peanuts compared to them. We do not know what lies ahead. All we know is this is a year which repeats over the last 100, 150 years of data that we already have with us. What are the probabilities of this not happening this year? You have two elections, US and India. You have wars happening. You have civil unrest happening. You have China turmoil. Tell me what is not, wrong in among all these things. There's so many factors. We are dodging all of them. But having said that, there are a lot of positives of leap years because the market crashes big. And when the market crashes, you have an opportunity to buy back all the stocks you like. And from there, you'll see those stocks doing 5, 10x again. But if you do not have cash at that point in time, if you are not sitting on capital at that point in time, you will not be able to take benefit of that fall. Rather, you will be among the ones who will be taking a hit, maybe get out of the market if needed. Do you really want to be there? It's a call that you need to take. My job is to guide you right. So please keep that in mind. This is 1992. There was a 44% fall in the market. There was a consolidation for a few months after that, and then it rallied. But this is a time, if you're sitting on cash, you can start buying your value buying. This is not the time where you do value buying. Today, we are hunting where stocks have some value remaining. Okay, and we are trying to write that up. We are not looking at some really good value buys from here, which can do 10x at the bottoms. 2000, 33, almost 34% fall, and the fall even continued after that until another 2 years, until the market bottomed out. The stocks of the IT stocks, when there were 100, 200 stocks listed on the market that time, there were only a handful, 5 or 6 stocks which continue even today. The rest, even today, if they continue, they are peanuts. They are penny stocks today. So if you want to get trapped in any of these things, that's your call. That answers my question about the small caps. 2004, all was going good. There was no concern except the election year. But after the rally, the Gale and we had 2 IPOs, I think Gale and IOC or one of them, I keep forgetting, ONGC. So there was a run up prior to that. The sentiments were held on because of the IPOs that were coming. And there was a 36% fall after that. There was a quick move back up. Congress won, there was a dip, market rallied back. If you were sitting on cash, you would have taken benefit of this. If you were not, we are traders, mind you, forget about looking at 100% upside. If there's a 5% dip, your capital will get eroded. So even to talk that, okay, if eventually it is going to come back up, even if it comes back up, you will not hold down to your positions. Your margin will get triggered. Keep that in mind. 2008, we all know what has happened. There was a 65% fall. 2016, this is the whole fall of 2015, and then 2016 is not able to cross the highs. So how choppy this entire time has been. 2020, we all know what has happened. Even in Jan, the news of a virus was around, but we did not know the impact. In fact, market dip, made a newer high, gave a breakout, trapped everyone, and then fell 40%. If you had cash, you had the confidence, you would have taken benefit of this levels to buy. The key over here is cash. Today, we have shared our holding statements with you guys of the equity and futures. We have capitalized a profit. The total capital is 1.8 CR. We are sitting on equity worth about 1 crore. We have 13 lakhs blocked in margin. We have 65 lakhs cash. Seeing breakouts happening every single day in the market, we have the ability to sit quiet and calm. It's not that we do not have positions. It's just that we want to be watchful. And I do not mind taking that cash position to even 50 to 80% if needed. Even if I add stocks from here, it will be in equity and it is not going to be in futures, very selectively in futures. We are doing this because we have experienced these things in the past and we are preparing ourselves for what is going to come ahead in 2024. So I'll share these presentations and these videos with you guys. Please keep this in mind and prepare yourself for 2024. We will continue where I left here. So sectors to watch, selectively banking. Let's see how it builds up. Metals, aluminum is like a buy on dip. IT selectively, auto selectively. Having said all these things, I'm going to give a list of stocks to you. We may not give them to buy, at our portfolio level, but we'll be giving you the levels. Your ability to, play this breakout with a smaller quantity is what today you need to take a call on how you're going to do that. Okay. Now, Amaraja giving a nice breakout, consolidated, moving back up. So if next week is higher than the current week, you can start accumulating. 1102 is the first target. Ashok Leland tested 200 AMA and moving back up. If it sustains above 185, it can do 204. That's a good quick trade. Again, it has not been able to consistently hold up. So be watchful. AU Bank going into all-time high. It is very important. It closes above the breakout points for a couple of days. Remember, on a daily chart, when it goes into all-time high, there's a spike. You take a trade. It is important that even your weekly gives you a confirmation. For a weekly to give you a confirmation, the weekly has to close above that and subsequent week has to be higher than that. Otherwise, your trade remains just for a swing instead of a positional. So AU Bank, let it sustain above 810, then you can expect 950. So don't be in a hurry. It is okay even up to buy up to 850. So don't be in a hurry. Bank of Baroda, now this is something that, it had given a breakout. It has retested this support line. Now we need to watch going from here is going to break down or reverse from here. Breaking down will help us short. If it reverses, it can give you a good trade from here. But having said that, Bank of Baroda has gone into all-time high. So upside can be good. Godrej Consumer. Now this is again a nice almost 2-year kind of a cup breakout, and again above 1150. Today the price is 1130. 1150 to 1200 range, let it sustain, is a good buy gradually. Now if you see over the months that every time I've given you guys these stocks, cup pattern breakouts into all-time high, I give them because the stock is there at an all-time high for a reason. It is strong for a reason. It is in momentum for a reason, and that momentum is going to continue. The success rate of that is almost 80-90%. But what is important is when you get in. If you are going to get into these stocks right at the breakout point with your full quantity and it retraces, you're gone. So let it build up. Let the steam build up. Don't be in a hurry. So Godrej Consumer above 1150, you can look at 1600, gradually should go up. The time frame to achieve these targets are typically 1/3 the time frame for the pattern formation. It can happen here or there, but it does. IEX, now we have given an initiated a call on this. It is building up, the volumes are strong. IEX, once it crosses 176, it'll break one big resistance. We may add a little more over there after reviewing it. And let's see the target ahead. Nippon India, now look at the stock. It has broken out. It is retested rather twice, and now it is reversing. Reversal is very important. Today it is 447. I have given a buy up to 470. The only reason I'm giving you higher is because it has to build up the steam. If it builds up the steam, and that's when it can continue the rally to 670. So no hurry. Now at the breakout point, if you go in on a daily chart to buy all the quantity, you will struggle over here. We gave Coforge to buy when a similar thing happened, but we exited quickly. Why? We needed more confirmation on the weekly. We bought back when that confirmation happened. Even if the trade is positional, you have to play a swing with it initially until there's a confirmation. Now, this is purely for your learning perspective, the RSI strategies that I talk about. There is a 14% correction in PFC. It has also tested the AMA. There's a good retracement, though RSI has gone below 60, made support at 50 or reverse from here. If RSI reverses and crosses 60 and sustains above that, PFC will be a good trade. So a stock which is already trending can give you another opportunity of another swing. So this is something that you need to learn and monitor at your end. I'm not going to give you this trade in PFC. Same goes with REC, a stock which is trending. There's a 14% correction. 14% is a good enough correction. Similarly, taken support of AMA, RSI at 60. Reversal is an opportunity to buy for the next swing. Sale, this is a weekly chart of sale. It is closer to the trend line resistance. Very important. Volumes are excellent last few weeks. You can see clearly over here. It is very, very important. It breaks out, holds above that. You will see a fresh breakout and a good target can be set for sale then. For now, keep a target around 130-ish or 127. Book your profits there, let the breakout happen, and then you can enter. Siemens India, we have bought, it has fallen, but beautifully not holding above 60 of RSI, not breaking that. Yesterday's candle was good. So reversals from here will be a good opportunity to add more in Siemens if you want to. Tata Motors. Now this again for explanation only. Please don't take this as a trade. Sonar has initiated and closed this yesterday. RSI reversals from 50. While weekly and monthly RSIs are strong, the stock is in momentum. The stock was on a highway, just slowed down. You enter, you ride the rally and get out. It's as simple as that. So any stock where longer terms are in momentum, the short term will not correct beyond a point. Tata Steel is giving a breakout after a very long time. When this highs were made, it had made a tremendous profit. The profit was almost 60% of its market cap. Everything seemed good at that point in time. But what happened? It did not recover. It kept falling. It's now recovering after almost 2 years. Now, this is not a very easy breakout. If it sustains above 141, let it sustain for a couple of days, and then you can look at for a complete reversal in the stock and can go up to 202. We know that DXY and the China story may impact the steel sector, so be watchful with your quantity. Ideally, I would suggest let it sustain for a couple of days above 145 to 150 range for you to accumulate. Don't be in a hurry. You need not eat this entire rally. If you enter somewhere here and ride up also is good enough. But by entering somewhere here, you are only safeguarding yourself, which is the need. Suzlon, a nice breakout that had happened. It is retesting and reversing. So reversals are good to add Suzlons again in smaller quantity and should do well as a stock. It is completely turning around. Again, a lot of retail participation. It won't be an easy up move. It requires a lot of patience. Now DLF, this is again just to show you how high momentum stocks continue the rally. And secondly, what I want to show you over here is there was a breakout at 521 when we said that we initiated a target of 976. On a daily when there was a breakout, we got in here, it consolidated, fell, and it moved up subsequently. Why do I say always when there's an all-time high breakout and buy after it sustains above certain levels? While the daily had broken out, the weekly candle had just closed and the second week had not confirmed the breakout. The second week didn't go above the high of the first week, which is a confirmation. Breakout is not always a point for you to accumulate. It is a confirmation when you accumulate. It took its own few weeks before it reversed again to start moving up. So here you can only play a swing, but for positional, you need to wait for more confirmation. So all stocks which are going into all-time high and breaking out, the trigger and the spike in daily will only help you do a trade. Wait for further confirmation for a bigger trade on weekly. It is very important. You have enough time to build up that portfolio on a weekly basis to accumulate because your target is substantially high. So I think this is all I have to discuss about the market and stocks.